Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 4 o'clock in New York on Tuesday, the 17th day of June, 2014, and this is the daily report for gold and silver. Mixed bag in the precious metals markets, with gold trading slightly lower on the day, silver, platinum, and palladium slightly higher. First to gold. Current print puts it off about $1.40 on the day. Print is $12.70 and change. Our low has been $12.58. Our high has been $12.73. Silver currently trading up about a nickel on the day. Current print $19.71. It's had a low of $19.38 and a high of $19.84. Traders, at this point, all of our subscribers who do follow my trade recommendations should be flat in the market, either having pulled profits yesterday as stops were hit at $12.69, or the day before when we got out with a price order at $12.83. In either case, we all got in at 53. You got in out between 83 and 70, a nice profit on the trade. Here's what I'm looking at, and here's what I'm seeing in the market. We're looking at a daily chart, standard candlestick format. And in that chart, what really catches my eye is these last three trading days. You can see that tremendous range in terms of these dojis, because we have very, very small body dojis, and the actual position of these dojis are in what's called, it's a very rare pattern, I don't see it that often, but it's called a tri-star top. 3 stars after the market has had a rally. Now, you might, in terms of the most classic way of defining this, not call these stars, because of the fact that they have these elongated lows here, elongated highs here. This would be a true star right in here that's got a much smaller body. However, we can make that extrapolation. We can move into the realm because of the fact that they are small-bodied candles, one. And the second fact is, when we look at the high that came in on the tri-star top star, so to speak, that matched quite closely with what we had pegged for resistance. Now, with the FOMC meeting underway today and tomorrow, my recommendation is we probably want to stay flat this market. The key is this: the fact that we were able to see this market rally, break through the 61.62 level, 1262, 61.8% retracement, but stall at the 50% retracement and then begin to back off, tells me that we still have, as I called it yesterday, a pretty solid brick wall right in here, forming our resistance at about 1286 to 1288. That was the reason that we had dual strategies, because we didn't know if it would break through. Our assumption was that if it could not break through, putting in a price order at 83 would get us out at a favorable price. And when we take a look at it, it absolutely did. When I saw the fact that the market really stalled upon hitting here, we sent out immediate notification to let you know to move the stop just below the low of the day. Low of the day was at that point, I believe, 70. We put it at 69, so we're out at 69. My sense is this: unless we can break through this ceiling right here, we could see lower prices up ahead. However, the fundamental news is not really telling us or singing that same song. We've got tremendous geopolitical uncertainty right now, but the economies as a whole are muddling along. And so the key right now on a technical basis, because that's how we've got to use our market timing, so to speak, is the fact that we need to see the market break through this ceiling right now at about 1286. Traders, I've gone ahead and converted our daily chart, which was in standard candlestick format, into a Japanese average, and lo and behold, what we're seeing, and this is kind of rare because typically on a market that's been moving up, we've had a little bit of stagnation over the last day, but you can see when compared to the midpoint right now, we've got a red candle. We've got a red candle with a pretty long tail, but a pretty short upper wick, and it's the upper wick that we want to focus on when we focus upon red candles, lower wicks on green candles, because again, we're comparing it to the midpoint And what that says is that it did trade a little bit above the midpoint and is currently trading off. As I said, it's only off about $1.40 on the day, but these charts are quite evident. The fact is, I do believe in terms of this last trade, when we take a look at the range, this is 55, so call this 53 right in here. We got in at 53 and then out between, whether you got out at 69 or 83, we took up a pretty sizable percentage of this last move. We've pulled up a 2-day chart. This 2-day chart is in Japanese average format. It has not turned red yet on the 2-day chart. Realize that with Japanese average charts are always lagging behind because of the fact they're comparing it to the prior midpoint, in this case, the midpoint of this candle, which is 2 days ago, this being Monday and Tuesday here, this concluding on Friday. But you can see that we have had the lower wick form. Body size is getting smaller. Also, when we convert our Japanese average 2-day into a standard candlestick showing true opens and closes. This, by the way, is the COMEX, which gives us true opens and closes, which is why I do like to use this. We can see this ominous candle. If it wasn't for the fact that it's got quite a large upper tail or wick, this would be almost a classic hangman. Hangman and hammer, the umbrella group, we talked about that a little bit. We also saw the formation of a shooting star on our daily chart. So we're getting, in terms of technical indications, the real possibility that we could see this market trend a little bit lower. Now, we are pegging, as I said, resistance is currently at 86 to 88. We still have to look at support right around 1260 to 1262. One of the best ways in terms of our Fib retracements to look at current support and resistance is by looking at this weekly chart. Primary support, absolutely, we never breached it. It's got to be about 1231. Our 61% retracement, call it 1261, 1262. That is what I am looking at right now as really critical support that needs to hold. If it cannot hold, it would obviously go and attempt to retest these lower levels down at around 1231. My sense is we might see a little weakness. We might see it kind of dive into this range a little bit, but my sense is we should find some sort of support at 1261. Current resistance absolutely at 1268. Silver. We are looking at our daily chart of silver. This is, again, is the COMEX. And when we look at this particular chart, let's go ahead and blow this up because this is a real clear-cut example of the candlestick known as a hangman. Criteria for this candle, first of all, umbrella group candles are always trend relational, meaning that after a defined uptrend, you cannot have a hangman. After a defined downtrend, it would be a hammer. After a defined uptrend, you get a small-bodied candle. You get a lower wick, meaning the distance between the real body and the real body. In the case of a green candle, of course, a real body would be the open to the low. In a red-bodied candle, it would be the close to the low. And realize that the one thing about umbrella candles and umbrella category is that this color is not relevant. We're not looking at color, whether it opened or closed higher. Instead, we are looking at the fact that you've got a very, very small bodied candle with a very long tail. So market moves up. We get this very small bodied candle yesterday, but defined high range. You can see this range going to almost 1990. This is where we exited our trade. Traders who got stopped out a little bit lower. That's going to be posted, of course, on our website, in the members page, the members portal page, along with our charts and our videos, specifics on this trade. And now the market does appear as though it could be a little bit top heavy. However, we do have an up day today. And the fact that we have an up day, we've got platinum, palladium, and silver all trading higher, to me is an interesting fact because that is where we're seeing some of the industrial needs of these metals really shining through, where we saw safe haven premium getting kind of sucked out of gold. We have a little bit of firmness in the industrial complex, I believe, because of a supply demand scenario. And then lastly, we've converted our daily silver chart into a Japanese average chart. You can see that we've had a distinct change in the market, even in this chart with a higher day. Why? Well, most importantly, we have this lower wick and a tremendously reduced body size when you compare it to the body size of yesterday. Unlike gold, which has turned red, this is still green, but it's green in a very ominous way when you consider the body size and the fact that we have now seen this tail move back into the picture. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.